There's probably a few things that are going on. One, I think it is an effort to pressure the Federal Reserve for lower rates. It's also a distraction. That was a picture for the ages yesterday. The president standing next to the chairman of the Federal Reserve wearing hard hats. Quite a story. And it also serves to find a place to have blame to the extent that the economy is not as strong as the president has said that it would be at this juncture. You heard him say that the Federal Reserve should be lowering rates, and that's the only thing standing in the way. So I think it does serve multiple purposes in terms of the storyline. But we also know that Federal Reserve chairs go down in history for actually following their mandate and not caving to political pressure. And those that do cave to political pressures tend not to be viewed very favorably in the history books.
Lael, it's great to have you with us. I want to ask you about the op-ed that you wrote recently in the Washington Post, an opinion piece with the headline, "The Real Reason Trump Wants to Fire the Fed Chair." You say it has everything to do with debt management. The president, you write, wants to reduce the debt service on the trillions his mega bill will add to the national debt. So now we're connecting the dots to the president's big, beautiful bill. The fact is, and you say this in your piece, they are saying it out loud. Lael Peter Navarro sat right at this desk a couple of days ago and talked about the need to lower interest rates in an effort to save $1 trillion when it comes to our debt. Is this the new mission creep? We hear a lot about mission creep in the central bank. Is this a version of that in your eyes?
Well, certainly this is the kind of diversion of the Federal Reserve from its core inflation fighting mission to supporting the administration's desire to finance this big new increase in the national debt cheaply. That is traditionally the way that central banks in other countries like Brazil or Turkey, Argentina, go awry and lose that credibility on inflation fighting. So I have to say that I was surprised to hear the president say it out loud when he says every percentage point reduction in interest rates translates into $300 billion. What he's talking about is interest payments on the national debt. And when he says, if the Fed will cut by 3 percentage points down to 1 percentage point, that'll save us $1 trillion in debt service. That's what he's really referring to. And he said it quite explicitly. And economists have a term for it because it has happened so many times in history. It's called fiscal dominance, when debt management becomes more important for the central bank than fighting inflation. And what happens is you lose control of inflation, and ultimately long-term interest rates actually go up.
Well, we did actually get a different sort of answer when we posed this question to Jill Livornia, senior counselor to the Treasury Secretary Scott Bessent, about concerns when it comes to the long end of the yield curve. He joined us on Balance of Power last week. I want to play you some of his reaction and then get your reaction on the other side.
I don't see how markets are going to be worried about that. In fact, if you look at where yields are, they're lower than where they started the year. And when a lot of the people who are worried about the market selling off because of credibility and things of that sort, these are many of the same folks who back in April said the U.S. was uninvestable. And yet we had Treasury data that came out today that showed essentially record inflow into the market with Treasury demand virtually at an all-time high. So these arguments, I don't think, hold up to really scrutiny into the facts.
We should say that response was last week on July 17th. But, Lael, I'm wondering what you make of that defense when it comes to this issue.
Well, what we did see when the markets were really reacting to news that this administration would really pressure the Federal Reserve and might fire the chair of the Federal Reserve back in April. That was the first time I think market participants really were digesting that news, and there was a lot of repositioning, as you'll recall. And what we saw is that the long end of the curve did actually go up quite a bit, and the dollar weakened. That is the kind of response response that you tend to see in circumstances where central banks lose credibility on the fight against inflation because investors demand more compensation to hold longer-term securities, sovereign securities, treasury securities, if they think that the currency is going to be weaker and inflation is going to go up. So that is just the traditional kind of market reaction. We have seen it. We certainly saw it back in April. Now, I believe markets have seen the president back down, say that he's not going to fire the Federal Reserve Chair. Yesterday, he was even somewhat complimentary. And I think that's why you're not seeing those kinds of reactions right now in markets. But I do think the reaction we saw in April was a cautionary tale.
It did seem the president came fixing for a bit of a fight yesterday. Lael, I'm sure you were watching as the two wore hard hats. The president pulled a piece of paper out of his suit jacket to prove to the Fed chair that not only was the renovation at the Eccles building running over in terms of money, but more than he thought, and he added a whole new building to the list. Let's bring everybody back to the construction site. Watch and listen.
It looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed. You're including the Martin renovation. You just added in a third building is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago.
Well, I'd love him to lower interest rates. But other than that, what can I tell you?
Complete with a knock on the back there. Lael, I'm wondering, as you watched this and had a chance to digest everything that happened yesterday, does this go down as a good day for Fed independence?
Look, I think what was interesting is that the Federal Reserve had a chance to explain what was going on with their renovations. These are very old buildings. They have two buildings that really haven't been renovated, I think, since the 1930s, and one that just was renovated for the first time since the 1970s. And I thought what was interesting is that the president really came out of those discussions, really showing his long experience as a real estate developer. He talked about how hard it is to build on a former swamp and the kind of very expensive renovations that are necessary to really be secure in pushing down when there are concerns about the water table. So in a way, it was interesting to see the president getting into the complexities of the renovation. In that sense, yes, I think it was a good day just for transparency around the Federal Reserve, which is so important because the Federal Reserve has to be accountable to the public.
Well, I do want to go back to this idea of so-called mission creep that Joe had mentioned earlier. We've heard this critique from Treasury Secretary Scott Bessent, from Kevin Warsh, who we know is potentially in the running to be the next Fed chair. Do you think that it would be healthy for the Fed to conduct a review of its non-monetary policy activities? Is that something that you think would actually be a good thing for the Fed to look into, whether or not that's an external review, for example?
So I always think that the Federal Reserve benefits from being accountable and transparent to the public and particularly to Congress. And it's really Congress who has oversight of the Federal Reserve, who wrote the Federal Reserve Act that governs the monetary policy and the Dodd-Frank Act that governs their responsibilities in financial stability policy. So I do think those kinds of reviews are very beneficial. And there are many mechanisms that the Federal Reserve could use to undertake such a review. The thing that would concern me, I have heard the Secretary of the Treasury saying that the administration would undertake a review.